Ooh, just tweaking a few settings on my side to make sure we're recording. So yes, we're recording. Hello, hello, hello. Welcome once again. As always, thank you for your time, your attention, just for taking a moment out of your day to spend it with little old me and taking a look at the markets. So as always, see a few faces there. Hey, hello, Anthony. We've got Bull. Hello. We've got Colin, we've got Ed, we've got Ian. Hello, Ian. We've got Kim, we've got Monty. Hello. A couple of new names there. So let's jump straight in. So it's Friday workshop. We're going to look at the markets. We're going to look at a few other things. Now, the other thing that we can start to do, which is kind of related to finding trades and then trying to evaluate the chart, is to look at indicator stacking. So what I'm going to talk about now, I'm going to talk about what sounds like a different subject because it is, but then I'm going to bring it back around to how we can use that chart-based analysis to try and help with some of the decisions, because some of the conversations that I've had in the last week or three is from people who are like, we're 20 days into this trade, but should I manage it because the chart looks like it might give more? And that is a little bit more of a discretionary decision. But what I'm going to talk about with the indicator stacking is going to help you start to make some discretionary decisions, some situational decisions. So that's what we're going to talk about next. Where's my charts? There we go. Right. So let's think about indicator stacking. Generally speaking, I'm not a fan of indicators in the traditional sense. Having a chart full of tools, a chart full of indicators, just for the sake of having them doesn't make sense. You can have stochastics, RSI, you can use Dow theory, GAN theory, Elliott wave theory. It doesn't really matter what indicators or tools we're using. Most people don't understand the tool that they're using, and that's really what it comes down to. It's just that someone said that you should use this tool, and when you get right down to it, you probably don't need a dozen tools. But if you are going to use them, if you are going to use indicators, have a reason for using it. And I know this might sound like a really big statement to the obvious, but have a reason for using the tool. Now, for years, I had volume. You may have seen, if you follow me for any length of time, I have volume on the charts. But before getting, just exclusively trading stocks, I traded Forex for kind of the first half of my career, the first 12 years of it, in fact. And there's not an accurate volume measure in Forex. So I didn't actually use volume for the first 10, 12 years of my career because there was no such thing as volume in Forex. You do not get an accurate measure of it. So it wasn't telling me anything. But now that we've got this volume on the charts, because when you're looking at stocks or futures or commodities, one of the things that everyone generally agrees on is that you should look at volume, and volume's going to tell you what is going on. But I don't know about you, but I'm looking at volume and I'm not really seeing anything other than this histogram on the bottom of the chart. And just like everyone else, I'm left wondering what volume is telling me. Is it really only confirming what is going on? There's a whole school of thought when it comes to volume analysis to try and help you understand. But what I want to do is I want a production line trading approach. I don't want to spend hours looking at the chart to try and figure out what the hell is going on. I don't need to look at volume to tell me that there's a lot of activity going on there. I can see visually the price is fucking moving like a freight train off the rails. I don't need volume to tell me that. It's just confirming what is going on or what's not going on. On this rally here, for example, this rally there, we had below average. This yellow line is the average of volume. So we had this below average volume. And traditionally that would say that, it's probably a rally and a downtrend. And I've got to admit, that was my interpretation. And then price consolidates, and we've got this low volume situation. Now, when price consolidates, we're expecting to see low volume. So it's not telling us anything that we're not already expecting to see. So at its most basic, what's volume really telling you? I don't know about you, but I've got more questions than I have answers just by looking at volume. As far as I'm concerned, it's just very pretty and looks nice on the chart. It's not telling me anything that I don't already know. Now let's take a look at momentum. So momentum tools are a nice way of saying that if we look at the high to low range of a candle, if the candles and the bars are getting taller, then momentum is increasing. If, like here, if the high-low range of the bars is getting smaller, then momentum is decreasing. So that is maybe a good tool. You know, is price speeding up or is it slowing down? So I can use a tool like momentum, and that's what this next tool is potentially showing me. But once again, I'm left with this notion of, well, I already know that price is going down, and visually I can see that the high-low range of the bars are getting taller, and then down here they're getting narrower. So is momentum telling me anything that I don't already know with momentum changing over? I mean, we can see that momentum is flipping from bullish to bearish and vice versa. A little bit bearish there. I know the color's a little bit off its gradients. I'm going to take it off in a moment. But right now, just for illustration, we've got momentum flipping to bullish up here. But yet price is not really confirming what the indicator is suggesting. So we've got this little bit of a conflict. And again, maybe volume can tell us what's going on. So when we look at volume, I don't know if you can just see that, but it's just starting to move above that average. It's a 100-period average reference. So we've got a little bit above average volume. Momentum's possibly moving higher, and yet price isn't yet doing anything. I've got to admit, now that we're saying this, looking at this, maybe it's going to confirm our primary scenario. So looking at price, is it moving or is it not moving, is broadly speaking what momentum is telling us. Volume should be confirming or not confirming movements. And looking at them separately, again, I'm none the wiser, because volume for many people is heavily discretionary, and the indicator is not really showing me anything that price isn't already showing me. So how about we blend those two things together? How about we stack them on top of each other? Great news is somebody's done the research. This is called Chaikin Money Flow. And what this third tool, it basically combines these two tools, volume and momentum, and creates this third indicator. And what it tries to do, rather cleverly, is to combine the volume, and then it's going to weight the momentum by using it as a multiplier. So if there's a lot of volume and a lot of movements, we're going to see the histogram on the top, we're going to see it increase. And if there's not a lot of volume and not a lot of movements, then we're going to see maybe like over here, there was some volume, some movements. And I think that's a more accurate reflection of what the market is doing. We can see that when we've got momentum and volume, we can see that we get the up movements, we get the down movements. It's very clear to help us interpret what is going on. So what we can do is we can stack the indicator on top of each other. And again, someone may have done the work, or you can customize it for yourself. But what I don't need is, I don't need volume, which like the raw volume on its own. I don't need momentum because that's not really showing me anything. But if I use a blend of these two tools, this is called, again, Chaikin Money Flow. It comes as standard in most tools. But what it allows me to do is to think about, do we have volume confirming direction and volume confirming movements? So we can stack these tools on top of each other to help us think about, is price moving in the right direction, and is volume confirming that direction? So now that we've got that, it's a little bit easier to say that, well, okay, well, the momentum is up. We can see that the histogram is pushing higher, And maybe that volume and momentum is moving higher like we thought. And that primary scenario that we spoke about earlier, that move above 3,200 on the S&P, if that was to happen, we've possibly got an early indication that, you know what, that scenario might just be unfolding for me. Maybe I want to get ahead of a breakout movement and start thinking about buying calls or buying or selling puts, or maybe I want to actually trade it on futures and trade, start thinking about a long entry on futures. So this is potentially a good indication to help me enter into a trade. But what I can also do is I can start thinking about trade managements when I've got this. So not only can we use these types of tools and indicators to help with the trade management idea, but we can also start thinking about the management of the trade. So before we go into thinking about using these tools with management, does that stacking, that blending of indicators, does that make sense? I mean, if you want to then start looking at other tools and other indicators, think about the purpose. I like using some other tools. I've got lots of things. I'm always testing ideas. But another tool that I like is percentage R. The setting for percentage R for reference is a 30 period. I don't typically like using the defaults, shorter periods. But what you should be able to see is while this is an oscillator, it stays overbought for long periods of time. So when the market is trending, we're able to find good opportunities. So if we're in a phase 3 trend, which is something that we look for, let's go back to Microsoft. And this is something that determines the trade choices on a previous trade. Is to think about, okay, Microsoft, okay, we're above the 200 period, we're above the 50 period, we've got volume and momentum is bullish. And then we've also got this indicator, which traditionally, classically, is used as a reversal indication. But with a 30 period setting, it's looking back over a month and a half. Why 30? Doesn't really matter. It's a long period setting. What we can do by stacking these indications is saying, okay, well, historically speaking, this chart trends. And when we're not just trending, because if we're in phase 3 trend, we're above the 200, we're above the 50, the average prices have crossed up. Classically, that's a good trend. But what if I want to find not just any trend, I want to find a strong trend? So not only that, what this tool's now saying is that if we have a strong trend when price is already proven to be trending, and this is a stronger category, it's basically saying in the last 30 days, in the last 30 periods, price is staying in the top 80% of its high-low range. That's essentially what this is showing me. So when we have a strong trend, and we're assuming that it will continue to trend, because again, history's told us that, hey, we see price trend on Microsoft. It does it really nicely. So when we have a strong trend, can we participate in that movement? So what we see here, just to kind of look for this past trigger. So this is where we got in previously. We've already profited from this move. So right now I'm waiting to see if we get a retracement for a brand new entry. So we've already got the trade on, thinking about the entry, but how can we use this for trade management? How can we start thinking about managing these trades? Let's go back to the slides. Where's I prepared some slides. Where's my little slide thing? There we go. So let's think about trade management for the slides. So now that we've got kind of like an idea of, we can use these tools, or we can stack these tools to help us find an entry opportunity. But what if we want to look at managing open positions? So last week we looked at time in trade, we looked at percentage return on capital. So what I've done is, and I'll look at the open positions, the profit, and then I've got the next slide is going to show the ones that are losing me money. So this is my open positions as of yesterday. And if I'm thinking about trade management, the first thing I want to sort is P&L by percentage. So as a percentage return on capital, we can see that we've got them 40s, 30s, 20s, 20s. So maybe if, and this is a thing with silver. So silver, I know, is about 21 days in trade. So if I'm 21 days, and again, I've got a little tool here, the broker will tell me days open. If I'm 21 days in trade and I'm seeing 20% return on capital, so there we go. So if I'm 21 days in trade and I'm looking at a 20% return on capital, then this is underperforming. Would you agree that just from a time point of view, 21 days in trade, it's at the average. From a return on capital point of view, it's underperforming. So can we all agree that we're on schedule, but underperforming? So time, not great profits. So I want to be thinking about managing the trade. Now, from a clinical decision point of view, close the trade. And if you want to keep it mechanical and you want to keep it clinical, close the trade. Does that make sense? So you understand that decision so far. Mechanically, 21 days in trade. I'm nowhere near my return on capital, but I'm making money. Let's close it and let's think about re-entering. Let's look for a new entry opportunity, but it's not moving as fast as I would like, but I'm making a small profit. Maybe we just cash out. Let's try and layer the decision as to what we should or shouldn't do. Let's try and combine that with a little bit of chart reading. And let's look at the chart to say, is today the day that I'm going to close that trade? So now, using the same tools, we're in from around here. Ooh, my apologies. We're about there, is where we're in. We're not near the targets. So let me just zoom out. So there's the targets. So that's where I'm thinking. I'm looking for about $18.50. That's the ultimate objective right there. We're 21 days into the trade, actually 22 days now. So I'm in the trade. It's trending. Visually, we can see the trend. The average prices have crossed. So this was a phase one trend. That's what got me into the trade in the first place. From a volume and momentum point of view, we can see that we've been increasing in volume, increasing in momentum. But right now, we can see that it's just gone sideways and it's starting to taper off a little bit. So the volume and momentum combination, it's slowing down on this rally. And that's not normally a good sign. Now, if it was consolidating like here, we would expect it to be declining. That's what we would expect right there. But we're seeing price make new highs, but volume is and momentum is divergence. That's the phrase that we would use there. So let me just pause there. Does that make sense? So my exit decision and my exit reason is starting to look better at this point. I've got one less reason to hold on to it. Now, if I saw the opposites where volume and momentum was increasing, then I'd probably be inclined to say, you know what, I'm going to give this until the end of the week, or I'm going to give this another 2 or 3 days. I mean, right now it's Friday. We're 21 days into the trade. Volume and momentum is declining. It's not increasing. And what I was doing at the beginning of the week was saying, okay, well, we've got this trending indication. It's trying to stay in its top 80% of its 30-day range, but it's declining on volume and momentum. Now, it's not strongly trending. It's dancing above and below. It's very zigzag. It doesn't look like the Microsoft where it was almost flatlining at the high of its range. If we look to history to see if silver, this is a silver ETF. So let's see if silver does this on a regular basis. It looks like, again, visually, these trends, these breakout moves, they don't last very long. So we can see the down move there. We can see the up move there. We can see the up move there. We can see a little bit of a pop there. We've got the sell off there. Didn't really trend down. But right now, so just visually, we can see that. What do you reckon from the indicator, from the tools point of view? Does it look like we're about average from a time trending point of view? The indicator is kind of confirming our decision that, you know, maybe we shouldn't hold on to this. Now, if I was looking at, let's use Microsoft. If I was looking at Microsoft as an example, we can see that this trends for long periods of time. If we were looking at this type of chart, I probably wouldn't be worried about volume and momentum declining, because we've seen it happen before, and yet the movements stay relatively strong. This is a good stock. So what I'm trying to do is I'm trying to interpret price through the use of these indicators that I've stacked to help me make the decisions based on the things that I want to see. If I'm looking for a trending stock, I want to see momentum increasing. I want to see price stay classically overbought for long periods of time, because that's going to reinforce a strong trend. And again, visually, you can see that Microsoft here, it stayed all blue, you know, through that period. It stayed in its upper 80% of its range, as it's done here. But when we go back to silver, we've got a very different picture. It only trends for brief periods. So we can see, so it does trend, but it only does that for brief periods. So maybe I'm thinking that's over, that's done with. I'm not going to hold for more. I'm not going to worry about, well, I'm only making 20%. Let's see if we get our 50, 60, 70% return on capital. I don't think I'm going to worry about trying to see what happens and give it a few more days. Does that thought process, does that ring true for everyone? Again, for me, I find that this logic chain, it is the voice of experience. It is drawing on a little bit of interpretation, but does that explanation just give you a little bit of an idea of what I'm looking at as to how to interpret? Should I keep this trade or should I fold it? It's underperforming, but should I give it some extra time? Yeah, it's underperforming, but should I give it some extra time? That's the decision that I'm trying to make. It's underperforming. What should we do with it? Should we hold it or fold it? So when we come to WPM, it's another stock that's in the metal sector. So we've got WPM. We're 9 days in WPM. So this had less time. We're 9 days in. And this time we're making about the same, but time in trade is 9 days. It's about 9 or 10 days. And I'm making about 40% return on capital. So let's go and take a look at this. Let's see if we can, do we want to close it early? Do we want to take the profit? You know, what should we do here? So this is the question that I might be asking myself. So let's go and take a look at WPM. So WPM, we've got 9 days in trade. So where do we enter? We entered about here, just to give you the visual reference. We're plenty of wiggle room to get to targets. Visually, we can see that the percentage R stays overbought for long periods of time. The trends can be quite strong, quite nice. So again, we've got these long periods of time. So right now, we've only just gone overbought again. Now, again, in the classic sense, you'd be looking for a reversal, but from a trend trader, we're in phase 3 trend. It's moving strongly. Volume and momentum is increasing just like all the other times. And it looks like volume and momentum has done this little 2-peak thing every time price has sold off. One exception, exception to every rule. But it's not as strong as last time. So we've got weak momentum by comparison, but we're 9 days in. Average time in trade is 20 days for me. So let's throw it out. Let's throw it out to the room. Should we hold it or should we fold it? Should we give it another 10 days, give it till next week? Or should we take the small profit now? What do you think? How should we hold it? Yeah. So we're looking for evidence. Looking for evidence. Great. So it just reaffirms the decision as to whether we should, again, because it's really easy to get excited and say, holy shit, I'm making 40% return on capital. And look at Oracle, it's doing 30%. And look at all this money. I'm doing amazing. It's brilliant. It's easy to get excited and jump off the trade early. That's the point. I don't want to jump off early. There's time and a place. SLV. Yes, I should jump off early. I'm looking to close that. I tried to close it yesterday, and for 3 pennies, I missed my target. I've got to admit, it pissed me off. But I'm going to close this today at some point. I'm not going to hold it and hope that it doesn't go over the weekend. However, if silver does continue, I'm not missing out, because this is also in the same sector. This is wheat and precious metals. So this is another good reason for having a portfolio of, and don't worry about having 2 or 3 stocks or exposures to one sector. Generally speaking, it'll work out. It allows you to, you know what, silver, I put this on ages ago. I'm a bit long in the trade. It's underperforming. Let's cash it out. But I've got this brand new trade on wheat and precious metals. This one looks like this is the one that's moving. Run the winners, cut the losers. So silver, underperforming. Wheat and precious metals, it's doing exactly what we want it to do. Why should I get overexcited and close this trade? I'm happy to hold this for the weekend. So that's the decision to make. And this is the thing that it takes longer to explain than to actually do. All of this happens at a glance. So I can go down most of these trades and I'm looking to say, okay, we're making money there, 20% at 9 days in the trade. Probably don't even need to look at the charts. You know, it's time, it's not quite to targets. My viewpoint hasn't changed. Take no action. So let's think about some of the losers. Let's look at Hershey's, the bane of my life. Hershey's, I've had this trade on for far too long. What happened with Hershey's is it jumped, I'm bearish on this trade for reference. It jumped higher and I'm many days over schedule on this. But right now, as of yesterday's close, I'm about 17% loss on the capital that I've used. So I'm losing, let's just call it 20%. I'm losing 20% of my capital allocation for this trade. I've had to sit through a huge retracement, and let's think about what we should be doing. Why haven't we closed the trade? So let's go and look at HSY and let's run it through. Oops. There we go. So let's run it through the ringer. So why am I still holding on to this trade? It's underperforming from time. It's underperforming from profits. And I've sat through this little bit of a retracement. Now, it wasn't underperforming at that point, but right now I'm over 20 days. We're bearish, but it doesn't look like it stays oversold for long periods of time. So I'm not going to worry about the indicator, the percentage R telling me that we should be in the bearish. I'm not going to worry about that, but I am looking at the volume and momentum because it's using volume. So we're looking at volume and momentum is increasing to the downside. So we've got more bearish movements than we've got bullish movements. Volume is confirming. We can see that price is moving lower. It's just not moving very far, very fast. I'd like to see it get to 120, maybe get halfway to targets, and I'd be happy with this. So it's just teetering on, should I close it or should I not close it? Certainly from a time point of view, again, I'm more than 20 days in trade, but I'm only losing 20% of my maximum loss. Now, what I do know is that if I was to close this from an option point of view, I'm happy to go up to 50% loss. I'm happy to lose up to 50% of my capital allocation. If I lose all of it, that's fine. I've worked out my position size based on 100% loss. But if I can get some cash back, then I will. Right now, I'm only losing 20%. So I'm foregoing the time in trade. My viewpoint hasn't changed. I'm still in a phase 3 trend. It's still moving lower. The highs are getting lower. It's just that the lows aren't getting lower. So we've got this consolidation. Really frustrating, but my viewpoint hasn't changed. That's the important part. So why am I still holding on to this? I'm losing 20. I'm over 20 days, so losing 20% over 20 days. I'm still in a phase 3 trend, so my viewpoint hasn't changed. It's still bearish. So I'm going to be using the 50% loss of my option, mainly because of what the chart is telling me. It's going lower. It's making lower highs. I'm waiting for it to move through, say, $125. And if it can do that, we'll probably see a fast move. What I would probably do on this is, because of the time elements, I'm over schedule. I would probably take a smaller profit target because I'm over my time allocation. So I'm not going to be looking for 100 or 200 or 300%. I'm not looking for a move down to 110. If it happened there in 2 or 3 days, very happy with it. But if it gets part of the way there, I'd probably take the smaller profits because I'm behind schedule. So in this case, this is my reasoning for holding onto this trade. My viewpoint hasn't changed. I'm a little bit behind schedule. I'm happy to sit through the loss and see if we can turn that around. So I'm going to manage my loser a little bit differently than my winner. I'm not going to turn a winner into a loser, but I'm certainly going to try my best to turn a loser into a winner. Does that make sense? So I'm happy to be a little bit more flexible with a trade that's a little bit underwater. If my viewpoint hasn't changed, I'm happy to hold on to turn it around. But with the winner, I'm not going to let that winner turn into a loser by hoping that I make more. I'm making something. I'm going to be more clinical and take the small profits. Whereas if I'm underwater with a trade like this, Hershey's, it's losing me some money, but I'm prepared to turn that around because it's an acceptable loss. Does that make sense? That's the difference between managing winners that are underperforming and losers that are underperforming. I'm more actively engaged in managing the losses than I am the winners. Small profit, take it. Not gonna stress over it. If it's underwater, I'm going to try and manage that more effectively. And that's the big difference. And I can use these tools to help me with that decision-making process. Does that make sense? That's all I've got to say on the subject. Awesome. A little bit over, but that's where I wanted to finish. We've spoken about indicator stacking and how that can help us not only find an entry, but also to follow on from last week's more clinical interpretation of trade management. We looked at time management, time in trade. We looked at return on capital last week. And this week we're fusing that together with, okay, well, how do we use that together with the charts? Now, I'd like to kind of add into that. Those decisions, they don't come, I wouldn't say easily. That's not the right way of saying. They come with time and experience. That's the best thing to consider. Early on in your career, you're probably going to be leaning towards a more clinical decision. We're 20 days in trade. I've got a loss, close it. If that's the decision that you're making early on in your career, that's fine. That's totally acceptable. But over time, when you've looked at 100 charts, 1,000 charts, 1,000 trades, that could be many years down your trading career. After a period of time, you'll be able to draw on experience. And that's the only thing that I can't give you as an educator, as a mentor. I can't give you experience. I can only show you my interpretation, the benefit of my experience. But if you're at the early stages of your career and you want to be clinical with the decision and you're making a small amount or you're losing a small amount, so maybe with Hershey's, it was you're losing 20%, you're over 20 days in trade, close it. Now you can always re-enter. That's the thing that most people don't consider with trade management is maybe you take the small loss early so you don't have to sit through this consolidation. Like I've seen these thousands of times. I'm happy with it. I'm okay with that. I've come to terms with it a long time ago. But as a new trader, you might not be used to sitting through a retracement. So maybe what you want to do is to close the trade early for a small loss and then wait for it to start moving again and re-enter the position. And that's an acceptable way of doing it. So just keep that in mind just as a final thought before we part ways for the day. So that's it. So that's indicator stacking to help with those discretionary decisions. That comes with time. Don't expect it to all fall into place overnight because every situation is different. But the more that you start trying to do that type of discretionary analysis, the better you'll get at it. Not every decision that you're going to make is right, and not every decision that you make is going to be wrong. What we're looking for is an average experience. What I like to do even after doing this for over 25 years, is I like to try and be as clinical as possible. I like to try and make the same decision most days. It's just about 10% of the time I'll be making these decisions. It's not 100% of the time as you might imagine. So it's only situational things, like with Hershey's. It's like, visually for me, I could say, hey, nothing's changed. It's still going down. It's consolidating. It's frustrating. I'm going to stay with it. And that's just that voice of experience. I'm only making those decisions a small percentage of the time. I'm not making them every time. So don't think that you have to do it all the time. Just know that it is a choice when it's relevant. So I think that's a great place to start. I don't see that I've missed any questions. I think I've answered everyone's as we've gone along. Once again, thank you for your time. Thank you for your time. Thank you for your attention. I don't know if what I do is right for you. However, if you do need some help, just know that there's someone that you can ask. If today's your first day and you need some help with the basics of trading and the charting, then we've got a very simple basics of trading program. If you want to know more about that, just send me an email. You've got my email, send me a message, phil@antivestor.com, and we can help you get started with the basics. If you'd like to take it a little bit further and do some of the stuff that we've talked about today, to find stocks, to find entry methods, to find profitable trading, that we've got a whole methodology to help you with your production line trading program. We've got full access to all of my strategies and lots of things that we're talking about. The library of knowledge and strategies is constantly expanding. I'm always trying to update and improve and add my research in there. So as we're going along, you'll have full access to that. So that's my shameless pitch for what I do. If you need further help, just know that it's available. And if you don't need it, that's cool as well. But whatever you decide is the most important thing. So with that said, once again, thank you for your time. Thank you for your attention. I'll see you all at the same time, the same place next week. And if you've got any questions, just send me an email to phil@antivestor.com, and we'll see if we can point you in the right direction. And with that said, see you all next week.